Good morning, everyone. My name is David Deal, and I'll be hosting your session this morning of a financial plan for life. Um, Let me tell you a little about myself. I am retired from Aurora University. Previously, I'd been the chief operating officer, and for a long time prior to that, an accounting professor. I've spent a lot of my time in the area of managerial accounting, which is where budgeting comes from. So this is really a fun area for me to dive into with you. I'm ably assisted today by Krista Koch, who is the Director of Student Leadership Development, and he will help with all the administrative aspects of the seminar today. So what we're going to be talking about today is your financial plan, or in broad terms, your budget. I've got a mouse that's not cooperating especially well. There we go. So what a financial plan or budget is really used to help you achieve success in your financial life. And we want to talk to you today about how to build that budget and then monitor and live with the results in ways that help you in the long run develop further wealth. And I hope you'll find this as interesting as I do. It is a really helpful tool in life. And so let me just first of all take us to the first question. And it is, what is a budget? And so I taught cost accounting for a lot of years, and we used a book from a preeminent cost accountant named Charles Horngren. And he defined a budget very simply. And he defined it as a quantified expression of a plan. And that's really what we're trying to do. In this particular case, a budget is specifically a plan that seeks to describe your income and expenses over a period of time. And we'll talk about income, expenses, and the time horizon in just a little bit. So remember that underlined text, because it's kind of important in the long run. And I want you to know that the budget will do three essential things for you. First of all, it'll help you project what your income is going to be. Second, it's going to help you estimate essential expenses and discretionary expenses, and we'll make distinctions about that in a little bit. And the budget, if properly constructed and executed, will help you save money so that you become financially independent over time. Now, Chris, could we have that first? We're going to have a couple of polls, 4 polls during this session, and I'm going to ask for that first poll right now. No, not financial aid. Oh. We'll do a budget one. There we go. So a budget is described as what? What do you think? Okay. Boy, we got quite a few participants again today. That's nice. So we can stop it here, I think. And the survey says that the last item, a plan that seeks to describe your income and expenses over time, is the right answer. And in fact, that's what I believe the right answer is. I will say that those first 2 that are identified, the outline of spending and prerequisite of saving, they're not wrong, but they're not complete, right? The complete answer is that last one. You might see that again somewhere, but not for credit or anything, but I would appreciate if you'd remember it. Okay, so that's great. And I hope we have a little fun with these as we go, because I think it helps keep you engaged in the process. So what is the objective of the budget? Well, you know, everything we do in life, we have to have a context for. You know, we live in a organic kind of environment. And so what the budget's intended to do is give you a context to evaluate, to understand, plan, and evaluate your income and expenses. And if you do that, it'll help you manage your spending. And if you can manage your spending, this all builds on one another. If you can manage your spending, it's going to help you save money. And if you can save money, you've got a lot more flexibility than if you are unable to do that. Ways that you will have additional flexibility include not having to use credit cards and engaging in credit card debt, and actually extinguishing existing debt. And all of that is going to contribute to your financial wellness. There's another session that I do actually called forming financial security or something, forming financial independence, something along those lines. And the budget is essential to being able to form financial independence. And the reason is that the budget is how you plan to save. Okay. And if you can save, then you can become financially independent. So that's the objective here. It's a key part of being financially successful. So what are the parts of a budget? It's not a very complicated thing, by the way, and every single one of you can do it. But it takes the income that you may have coming, and I've just listed a few in the box. I've just listed a few kinds of income you might have. Almost all of us will have salary. You might, if you're fortunate, have bonuses. If you're a salesperson, you might have commissions. As you grow into your financial life, you will start to have an investment return. So as you save money, you'll start to earn interest. Perhaps you'll earn some dividends. You might have some capital gains. Okay. And those sorts of things are what we would call income. And there's many others besides. For example, I own an accounting practice, and that's business income. And there are others besides, and there are going to be some that are unique to each of you. Expenses, on the other hand, are how we spend that money that we bring in as income. And obviously, all of us have monthly bills. Some of us have some desired or discretionary spending. I'm certainly one of those. And, you know, these are things that we would like to do, but we don't necessarily have to do. I would like for you to think of saving as an expense, sort of. You know, you put your money aside and it will grow over time. So it's really not technically an expense, but think of it as an outflow of cash. Debt repayment you need to account for in your expenses. And then last of all, philanthropy. And that is charitable giving that you may, probably not so early in your life, but later on in your life, decide to do to support causes that are important to you. So what kind of tools do you need to have to budget? And what you really need to do is have a lined paper and a pencil. It's no more complicated than that. And all you have to do is write down and total up your income, write down and total up those expenses, and make sure that the expenses are not greater than the income. If you can manage to equal the expenses and the income, we would call that a balanced budget. You hear about that in the news all the time with respect to governments and institutions and so forth. Do they have a balanced budget, right? If you can only get to a point where your expenses are a little bit higher than your income, you are in a situation called deficit spending. And we don't want to have deficits, because deficits require us to engage in borrowing or debt in order to balance the books. But the best case of all is if your expenses are less than your income, and that's a surplus. And surpluses enable us to save more and in the long run be more wealthy. Now, if you have less expenses than income, and you therefore have a surplus, what you're going to end up with in your life is greater flexibility. What do you do with that surplus? Well, you could put it in a bank or some other savings vehicle, but there's another option. Let's say you've got some bigger expense next month. You could roll that surplus in the budget for the next month and use it there, right? So there's a lot of flexibility that you get by keeping your spending below your income. And I don't have a reference to it in this particular presentation, but I would encourage you to read a book by two economists called Stanley and Danko, called The Millionaire Next Door. And it will describe to you how many ordinary people like me and you have become millionaires over time, largely by spending less than they bring in. Okay, so one of the questions you might have is, if I think about my spending, what percentage of it should go to those essentials? What percentage of it should go to savings? What percentage of it should go to wants, right? And so I've looked and found a variety of different bibliographic sources that pose different percentages. So if we start at the top left, you'll note that the first one says you should spend 70% of your funds, your income, on monthly bills and spending. So monthly bills and then discretionary items, 20% on savings, and 10% on debt reduction or giving. And so if you compare that to the right-hand upper box, it says 60% on living expenses, 20% on financial goals. That might be something like setting aside money to buy a house or a car or have a special event of some sort, vacation, and then 10% on discretionary. And then the third box, the bottom left, puts it in different terms: 50% on needs, which I interpret as essential expenses, 30% on wants, which I perceive as discretionary expenses, and then 20% on savings. But the box that's really right for you is the bottom right. And that is that you've got to choose an allocation that works for you. And because in the end, a budget is your document, a budget is your plan. And I'm really anxious that you create it in a way that will work for you, because if it doesn't work for you, you're going to abandon it. And I don't recommend that. You need to have a budget to be effective. Now, somebody out there has to be thinking, I'm making this case for budgets. Do I have one? And my answer is absolutely. And I look at it every month. I evaluate it every month, and I have to make corrections. And one of the things you need to know is that I don't always have a good outcome every month, and you probably won't either. You should have a good outcome most months, but occasionally you get a hiccup and you've got to spend money that you hadn't planned on. So just know this isn't something just for people that'll be entering the professions soon. This is for people that are retired from their profession at this point. So I definitely encourage to use a budget for your entire lifespan. So let's look then at how you actually create this budget. It's not very hard. It's just addition and subtraction. There's no fancy math here involved. So the first thing is you got to decide if you're going to budget on a monthly or annual basis. And I have a recommendation here. I strongly recommend you do it on a monthly basis. Let me tell you why. I've tried both. And in my job here at the university, when I was a COO, I had a big budget and it was annual. And so departments that reported to me included the police department and emergency management and the information technology and facilities. And as you can imagine, I was having to spend a lot of money to meet all kinds of different needs. And I found at the end of the year, typically, the end of the fiscal year, I was typically scratching, trying to make ends meet. And that's because when you look at it on an annual basis, it becomes hard to determine what your moves should be on a monthly basis. So I actually, in the long run, had my assistant break that budget down into a monthly budget for me so that it was a little bit easier to follow. And that's what I recommend for you. And what I further recommend is that you put this together in, say, a spreadsheet, Excel, or like I said, even on green paper, like I used to do in the old days. And you have a column for each month, January through December, and then an end column, an annual column. And that enables you to look at things on both micro and macro bases so that you can do a real good job of understanding what your conditions are. Okay, so my recommendation is to budget monthly. And then what you're going to do is figure out what your expected income is. Now, that income, remember, it's not just your salary. It can be a lot of other things that potentially could come in. And for some people, it might also include secondary employment. Like I said, I have a small accounting practice, and even when I was working here at the university, I had a small accounting practice on the side. And those sorts of things are income too. So things that you might consider hobbies or side jobs, those all may provide income for you. Okay. So you're going to establish your expected income. Then you're going to have to define your living expenses and amounts. So what do I mean by that? Well, it's the usual living expenses: housing, food, clothing, medical care, the things that you have to have in life in order to subsist. Not suggesting that you should put everything in living expenses, but definitely you want to account for most of the key ones. And then you're going to have optional expenses. Now, optional expenses are ones that you could do without, but you'd really kind of like to have. And as I've told the other 2 sessions that I've done for this, I like to have a pedicure periodically, but some months I can't do it because it just doesn't fit into my budget. So I make adjustments. Here, that's one of the optional expenses. Okay. It's not what I would call a living expense because I don't have to have it. Food is definitely a living expense. So, so you've now got expected income, living expenses, and optional expenses. And then the next thing you want to think about is how much can you save? What do you have left over to save? Okay. And you want to slot that in so that you can account for it as well. All right. So hopefully when you do all the arithmetic there, your expenses, including savings, will not exceed your expected income. If it does, you're going to have to adjust. Okay. And, adjusting's not hard. You just start to move chess pieces around the board to make everything fit. Now, I had a comment or a question yesterday that said, what if I just can't make it fit? You got 2 choices, 2 places that you can work with. One is you could potentially make your savings a little less than you'd hoped. So that's one option. The other option is that maybe you can grow your income a little bit by doing some side work. A third option, I said there were 2, but a third option is that maybe you have to go back and reevaluate your living expenses. And we'll talk about that in some detail in just a minute when we talk about the categories of expense. Okay, great. So I want to talk first about your expected income. And I think anybody that's ever earned a paycheck in the United States of America is painfully aware that you're not paid what your salary is, right? And that's because we have taxes deducted, we have potentially retirement plans deducted, we have health insurance deducted. And so if you build your budget from the basis of what we know as gross pay or your advertised rate of pay, you're going to have a problem because you're not going to get all of that. So let me show you a little example of that because this is a pretty significant issue. Assume a young professional going out in the marketplace makes $50,000 a year and it's paid twice a month. That person will have a gross pay or the $50,000 will break down into a pay period of $2,083. But then we got to take out Social Security and Medicare and federal income tax and state income tax and health insurance. And finally, that net pay breaks down to approximately $1,515. It's kind of painful. It makes me sad. I know that. So that means that you only get to keep $1,515 out of $2,000, or almost $2,100, or $3,030 per month out of about $4,100. It's really hurtful. But anyway, that's what you've got to work with. And so that's where you should start your budget. So I'm not going to talk too much yet about the other forms of income and how you evaluate those, but this is the big one that we're all pretty much sure to deal with. So from there, you want to figure out your essential expenses. And in this table, I've listed out a wide variety of essential expenses, things that you pretty much have to do most of the time, one way or another. I want to point out that not all of these things are going to happen every month, right? So, for example, rent's going to happen every month, or a mortgage, or whatever that housing cost is. But notice things like car registration. That's only going to come up once a year. And I live in Missouri, so we actually do it once every 2 years, which is kind of fun. If you look at birthdays, they don't come up all the time. I mean, everybody's only got one birthday a year. So that's a place that you're only going to slot in once for every person that you want to consider. Holiday gifts, that doesn't come around all the time, 3 or 4 times a year, maybe. So you can pick and choose each month from what you need. And these are hardly the only categories that you might consider. You probably have ones that are unique to you, and you should build your budget to include things that are unique to you that don't fit in here. Now, I want to point out a couple of things. Food and grocery. Grocery is food, is it not? Yeah, it is. But I'm talking about two separate things there, really. So grocery is what you buy raw food and cook it for yourself, right? Food to me is going out to takeaway or a restaurant to sit down. And that's a whole lot more expensive than eating for yourself or cooking for yourself. And the point here is that this is a place where if you need to, you can make an adjustment, right? You could reduce dining out and increase grocery, for example, and do quite well. Other things that I look here that really kind of jump out at me are subscriptions and memberships. Many people engage in subscriptions for various services and find out that they're either not using them or that they have oversubscribed. Now, I found out recently that I was paying Adobe for 2 different subscriptions for the same thing. That's kind of dumb that it happened, but I was able to turn it off, and it saved me $150. And so that's a good thing. I like that. Memberships. You have to look at what you're a member of. And for example, this time of year, gym memberships are very popular. And after the donuts I ate this morning, I should probably have one. But what you're going to learn is that sometimes you don't use your memberships. And if you're not using them, you probably shouldn't keep paying for them. These are other places that you can save and take a look at what can happen. Another one that strikes me is bank fees. You know, by and large, you shouldn't pay any fees for your banking. But what people get hit with lots of times on bank fees is overdraft fees. So you inadvertently write a bad check. I have done that, but I've only done it once or twice in my life, and I'm getting old. But a lot of people will have troubles with that. And I would encourage you to find ways to avoid bank fees because they can really add up to money, and hopefully you don't end up paying many of them. So those are ones that just sort of jump out at me as ways or places that you might find some savings, just thinking about what you're spending. Okay. And by the way, you're going to apply a value to each of these categories, but here's the key, that value may not be the same each month, right? Because it isn't always the same requirement for spending each month. Sometimes it's higher, sometimes it's lower. That's another reason I like monthly spending or monthly budgeting versus annual budgeting. Okay, so now if you think about it, we've talked about income, and we've talked about essential expenses. Now let's talk about other things you might like, your wants. Okay, there's nothing wrong with having wants. We all do. I know I do. And I just picked a few things out of my ear that might be things that people want: jewelry, sports equipment, technology, a lamp or something for the house, a spa day. They're not going to be the same for any single person on this call. They're going to be unique to what you like, right? And what you want. And I would tell you that these are important expenses. It sounds sort of nutty to say that, but one of the things that you have to be aware of in budgeting is not to deprive yourself. What I really would like to see is for you to have a budget that you can live with and feel comfortable with and feel satisfied in your life, right? And so to be satisfied, in addition to those things we probably need a few things that we want. And the challenge here is to limit that in some way. And we'll talk a little more about that when we talk about how to make that budget successful once you've created it. Okay. Once again, you're going to apply a value to each category, and the categories may not be the same every month. Sometimes you'll do something, sometimes you won't. Okay. So lastly, I'd like you to think about listing your planned savings. And I think these savings come in 3 or 4 different categories. One is emergency fund. Every single person should have an emergency fund. How much should that be? Well, in the ideal world, I think an emergency fund should be somewhere between 3 and 6 months of your living expenses, and it should be in a bank where it's secure and easily accessible. I will give you a reason, or I'll give you an example why you might need an emergency fund. So about this time last year, I was at the dentist's office and found out that I needed to have some significant dental work done, and it was going to cost something like $8,000. And the choices would be to write a check and pay the guy, which was not in my monthly budget, or to use a credit card, which would create debt that I didn't want to pay. So I opted to dip into my emergency fund and pay myself back instead of paying the credit card company. And I paid myself back over a year, and my emergency fund's back where it belongs. Another example of an emergency fund is that 20 years ago or so, I was dismissed from Cisco Systems because I apparently was an embarrassment after only growing my business 100% year over year. And I was looking for a job for about 3 months and finally found a great job. And during that 3-month period, I didn't have to resort to credit cards at all. I used my emergency fund, right? So this emergency fund savings is really a critical part of creating your own personal financial wellness. And it's something you should include in your budget. Another area of savings you might want to include in your budget is what I call targeted savings. So maybe you want to buy a home and you need a down payment, or maybe you want to buy a car or maybe you've got a family event like a wedding or a anniversary that you want to memorialize and pay for the celebration, right? Those sorts of things I would call targeted savings. Once again, these are different for everybody, but and they go along lines of what your values are, and that's the way it should be, because this plan is your plan. Lastly, lastly for the key things is retirement savings. And in the old days, companies would pay for a retirement plan for all of its employees. And when you retired, you hadn't contributed to it necessarily, but you would get a pension upon retirement. That doesn't happen anymore. Companies provide ways for you to save, but you actually have to do the saving now, and they may contribute some, but they've gotten out of the what's called defined benefit pension plans because it was so costly. So you need to start thinking, and I know it sounds crazy because many of you are young, but when you start out in your jobs at 22 or 23 or 25 years old, you really need to go ahead and get working on this, get working on retirement savings. Now, that tax deposits note there, and I see some questions coming in, we'll answer in just a second, but on that tax deposit note, that's for when you start to get more investment returns, when you start getting more interest and dividends that are taxable. You may get to a point, I hope you get to a point, where you have to make income tax quarterly estimated payments, and you put money aside for that too. Okay. So I have a couple of, one of them disappeared. The first question.
I answered him offline.
Oh, okay. First question is, do you think paying rent is a bad investment? I want to work on the words here a little bit, so excuse me, but rent is not an investment, because you get to use the dwelling for your purposes for a fixed period of time, but you don't own anything afterwards, right? An investment is something that provides lasting value. And so rent, in my view, rent is not an investment. Rent is an expense. It's better financially. Well, let me back up. In the US, historically, it's been financially better to own a home rather than rent one. And it's not true for everybody, but for many people, that is the case. And the problem is that entering into home ownership isn't easy, because the price of homes has risen pretty dramatically in my lifetime. And so it takes a while to get in a position where you can provide the necessary funds to start to buy a home. In that case, rent is what I would call a necessary expense. You need a place to live, right? But it's not going to yield a big return for you. An investment will yield a return. And one of the best things I've invested in over the years is my homes. And they're hard to start to get into. They require a lot of money, but when you can, and when the time is right, and when you've saved money because you've budgeted well, then I would encourage you to think about maybe buying a home. But until then, rent is an expense in my view, and an unfortunate one maybe, but one that we all have to face under the circumstances that we live in. Thank you for asking that question. It's a good one. Okay, so we've got we've now identified income, two kinds of expenses, essential and discretionary, and the last one is planning your savings. By the way, I'm looking at myself in the mirror in the picture here. My hand looks giant. It really isn't that big. Okay. So what you do then is just put it all together. And this is just a little cutout Excel spreadsheet that I did as an example. So you'll notice at the top, That's at $3,030 that you would get from your monthly pay if you were making $50,000 a year. Okay, roughly speaking. And you'll notice also that I put another item in there. I've got some items that don't have any income, but I've also got an item in there called tax refund. So your tax refund is, in fact, for budgeting purposes, income. It's not taxable income, by the way, but it is income. So in this particular case, in this particular month, the individual has $4,030 to spend. So they have essential expenses. And you'll notice their rent and food and clothing and daily incidentals, a car payment, and some household maintenance. And they total up to a little over $2,000. You got want expenses. I want to buy a lamp. I want to buy a printer, let's say, and I want to get my feet done. Okay. So that's $500. And then we got some saving. I'm calling them saving expenses. They're not really expenses. They are investments. Okay. So I got some saving that I'm addressing here, which is emergency fund of $500. And then I've got, oh, look at there. There's a debt reduction item. That's not really saving, is it? Well, if you reduce your debt, what you're doing is increasing your net worth. So in a way, debt reduction is a form of saving. It doesn't put money in the bank, but it takes the monkey off your shoulder, right? You can get much more free without debt than you would be with it. And so debt reduction is a reasonable way to build your wealth by eliminating debt, but it's not going to put money in the bank for you. Okay, it's just going to prevent future outflows. You have to kind of think of those two together, and that's $1,250 in total. So if you add it all up, I have $4,030 to spend, and I have $3,850 planned to spend, and it leaves me with $180. That's cool. I could take that $180 and put it in the bank. Lovely. Or I could say next month, I see a couple extra things coming. I could use that $180. So you just leave it in the checking account and you start your month with all of the income that you expect, and you can just drop that $180 into that income item, right? You've got some extra that you can carry forward. So that's all it really takes. Add all your sources of income, subtract all your planned expenses, look for balance, and then make adjustments as needed. Now, it would be bad if that $180 outcome was a negative $180. That would not be acceptable. So what would you do? Well, you'd have to go back, and if you can't, squeeze any more income, what you would have to do is go back and look at your expenses and say, where could I potentially cut back a little bit and get that $180, negative $180 gone, right? Make it a balanced budget. And that's sort of what every business in America does. And quite frankly, every family in America does, whether they know they're really doing it or not. Okay. Because you have to make that balance. If it doesn't balance, you're going to be long-term in trouble. All right. So that's how you make a budget. That's only half the equation. Well, actually, it's less than half the equation. What we got to do now is figure out how to use it, right? And what I'm going to tell you a couple of things about evaluating your performance, and then we'll talk about how we can actually make a little bit of hay out of this budget and make it work for us. So the longer term, you got to look, you do a monthly budget so you can control what's going on. It's easy to manage. And then you want to look at it over the long term. Are there trends? Trends tell us a lot on a macro basis versus looking at each month in a micro basis. And I would strongly encourage you to start to look at these things as trends. I've even gone as far in my life as to draw graphs to reflect certain things, to reflect the income. I can tell you that I'm a CPA, I'm a tax accountant. Guess what? I make more income in the spring than I do in the fall, right? So that tells you when you can afford to do things and when you can't. You can see what your expense trends are. Good grief, I just got a huge heating bill at my home. Gas has gotten really expensive. And so I can map that out and see that obviously I pay a higher gas bill in cold months and a higher electric bill in the warm months. And that will give you insight, and it will tell you a lot about your financial behavior. Why do you do what you do? And that's really important to understand about yourself, by the way, because that will help you take steps to enhance the ability to save. I have a good question here that I want to bring up. So it says, I started a job in August that does not take out any taxes. Do you have any advice on what I should do in that situation as a 21-year-old? And I do. So I'm assuming that's something that's reported on a Form 1099, and it's like an independent contractor sort of job. And typically in a case like that, you are going to be liable for taxes. And it's not a great idea to wait until April to figure out what you're going to owe the government, because A, you might be surprised, and B, you might be penalized by the government because you didn't pay timely. So my recommendation to people that are in that environment is that they make quarterly payments for what they expect their taxes will be. Now, if you pay too much in, that's okay. You can get a refund, just like somebody that has been over withheld. If you pay too little in, you can make it up at April 15th. But if you get fairly close, there won't be any penalties. It's important then to include, for a situation like yours, it's important to include those taxes that you're probably going to have to pay in your budget, because you need to put them aside until it comes time to pay them. So just so you know, estimated taxes are due on April 15th, June 15th, September 15th, and January 15th for the future year that you're coming up. And you should probably take a look at that. What I can tell you is the state of Illinois is pretty easy. It's a flat 5% tax. The government, the United States government, is a little harder to kind of divine what it will take. But I would say that it'll be less than 10% likely. Okay. So hopefully that helps you a little bit, but that's a good question, because if you do have a 1099 job versus a W-2 job, what you're going to want to do is make sure that you set aside money in your budget for taxes. Okay. So once you understand your trends in the longer term, I want you to take another look at your budget and say, do you need to make adjustments? And if you need to make adjustments, do it in concert with what you value. If you absolutely have to have a luxury, then include it. But if there are luxuries that you'd like to have, but you don't have to have, maybe you can scratch them. Okay. What I don't want is for you to feel deprived once you create the budget, because there's really no need for that. Usually you can work a way around it so you can enjoy some things too. And in the end, we want you to have an enjoyable life. So Be sure you analyze your budget and make sure that it is a reasonable one, that you understand your trends and saving opportunities, and then that you adjust the budget based on your observations. Really as simple as that. So let's talk about tips for saving, for living on a budget. And the first one says save before spending. What do I mean by that? Well, saving, like a lot of other things, is a habit. It's kind of a muscle memory thing. So your brain is the muscle in this case, but it's a muscle memory thing. And if you start to save in small ways, then over time you'll start to save in bigger ways. So before you pay your bills, pay yourself. Put your money in the bank for your savings. Now you may have to go borrow a little of it back, but it's really a good idea to pay yourself first, because that way the saving habit will become ingrained. And what I can tell you, and this is a habit that's a good one, it's kind of an addiction in a way. Once you see those balances start to go up, and once you see the interest start to come in, you're definitely going to want to continue saving, because you're going to see the value and the power of it, and it's going to give you greater flexibility in your life. The next thing I would say is let's pay down that debt if you can. Okay. Many of you will have college debt, and we don't know what the politics around all of that are going to be, but what I can say in general terms is if you do end up having to pay college debt back, try to address it as quickly and reasonably as you can, once again, without making yourself miserable in the process. Okay. Now, this is a big thing for me. I'd like to see you pay with cash or with debit cards for most purchases. Credit cards are dangerous because they permit you not to pay your bills right away, and then you start to accrue interest. We had a student, I don't know who it was anonymous, and that's good, indicate that they had an enormous amount of credit card debt. I mean, huge amount of credit card debt. And it kept me up that night because I felt terrible for them. And one of the ways to deal with this is simply not to let it happen. So why cash or a debit card? Well, I don't know about you, but when I hand over cash, I feel an attachment or an understanding, emotional attachment to the sale, right? It may be something that's not very interesting, like a tank of gas or a bag of groceries, but I feel like I had a transaction, I've got it in my hand, and I coughed up an asset for it, right? If I use a credit card and there's no immediate consequence, it's remote, and I don't care that much anymore, right? And that's exactly what the credit card companies want you to think. So this is an area called behavioral finance. And what we would suggest is if you use cash, or a debit card's not bad, because once you swipe the card, the money's gone, and you know that. So you have that same sort of attachment to the sale. And I really encourage you to use either cash or debit, not credit. Now, you can't we live in a world where credit cards are a fact. And I know that you're not going to be able to avoid them entirely. But boy, just try to keep them at bay is my best advice. So plan large purchases to avoid impulse spending. Anybody that knows me knows that I am a car guy, and I love European cars. I have a friend that brokers European cars, and he had to show me a car the other day. He's had to show me a car the other day, which was a Bentley. And David will not be buying a Bentley, okay? Because I planned. and I know roughly what I'm going to buy, and it will be a Bentley, and I'm not going to spend that kind of money. But there are people that will look at that Bentley and see how cool it is, and it is very cool, and flinch and reach for their checkbooks, right? And that's a really extreme example of it. But let me give you an example that's much more down to earth. One of my colleagues here at the university likes fashion, and she goes through catalogs that come to their home, and she'll tear out pages that she's interested in, and she'll have a big stack of these pages, and she'll let them sit for a few days and then go through them again and throw away 90% of them and say, I don't really want that, right? Impulse purchasing can be really, really troublesome. And I'm really going to encourage you to avoid impulse spending. And in order to do that, you have to plan. Okay. So I got a couple questions up here I want to address. One says, since utilities can change month to month, what is the best way to estimate what to plan for that? Should you overestimate or just average? So what my advice is on that is that utility companies such as Nicor and what's the electric company, Commonwealth Edison, I don't live here, so they can give you a budget billing plan that doesn't cost you anything, and you average out the bill for you. And I do that in my own life. I mean, I know what I'm going to pay the electric company and the gas company and the water bill every month. It's in St. Louis, but it's the same concept. That would be my recommendation. You might call them and ask, do they do budget billing? And I know that NIGAS does, because I use it at my house up here. I'm not sure about ComEd, but I think so. So I have another one here that says, if you use a credit card properly, isn't it better? It's a safer option. I use credit cards for everything, but I also pay it off at the end of the month. By doing this, I do not have interest on the purchase, and I'm also helping my credit tremendously. So there are some really valid points here. If you have the discipline to pay the bill off in its entirety every month, credit cards are not a bad option. But the reason I oppose them is that for a vast majority of the population, they don't have that discipline, and they get in big trouble. This is a responsible student that asked this question, and there's nothing wrong with that, but you have to keep that discipline going. If you don't, you can end up in some difficulty. As to the credit score thing, having a decent credit score is important, but I don't know that it's the end all be all for me. I have almost no debt. Because of that, my credit score is not very high, but it's okay. I mean, I can get a loan if I need it. But one of the things that happens is the more you borrow or the more you use credit, the greater your credit score is, up to the point where you start paying for it, right? And so it's a really two-edged sword. But if you can use credit responsibly, like the person who asked this question, that is not a problem. It used to be that credit cards were safer than debit cards. That's less true now. It's not completely washed out, but it's less true because most banks protect them in the same way. But there's risk in credit. Okay. It says, if you want to own a home but have debt, which one should I focus on first? Spend money on rent, mortgage, and or paying back debt? Well, it depends. So accountants have this favorite expression, which is it depends. And it's hard to give you a definitive answer on that, because it depends on the extent of the debt. It depends on the size of the mortgage or the rent. And it depends on what other resources and expenses you have. If you can fit debt extinguishment and rent into the income that you have, I would extinguish the debt first and then go to buy a house. But if it doesn't all fit, then you have to start thinking about how to moderate things inside your inside the capacity that you have to spend. And that's a complex question. I don't have enough data to really be able to answer it. But what you have to do is, it's always better to eliminate other debt before you, it's always better to eliminate existing debt before you engage in new debt, if you can. Okay. Now, I will say this: home ownership debt is, in my view, the best of the debt, because it is for an appreciating asset. Okay. The house will grow up in value. Very few other things that we can buy do that. Boy, I'm starting to get a lot of Q&A now. So I've got one here that I think is kind of interesting. It says, I waitress on the side on the weekends on top of my normal job, so I know how much I make from my normal job, but I never know about how much I'll make on the weekends. Lately, I've been counting that as my extra money. Do you think that's okay? I absolutely think that's okay. Because what you're doing is you're thinking about your normal job, in quotation marks, as your base income. If you got extra income through your waitress job, your extra money, I think that's an appropriate way to look at things. And so I think that's perfect. I have another one here that says, in your other session, you mentioned not investing money into mutual funds until you've built up your savings first. I did. How much would you recommend saving before investing? Well, so it's going to vary for everybody, and you'll figure that out a little bit as you go. But my advice would be that the first thing you got to do is build up that emergency fund, 3 to 6 months of living expenses. That's my best answer on that. Someone has a loan at 17.7% interest. That hurts. I have money in my savings, but I'm nervous to use my savings just in case something happens. What is your advice? Well, I agree. I would be nervous about you using your savings too. But what I would want to do is, when I think about building a budget, I would prioritize paying down that loan as quickly as possible, because that is a high interest rate. And by the way, that's not as high as some credit card interest rates. Some credit cards go as high as 30%. So, yeah, that's something that, what I would do is try to pay that loan down as much as I could, as quickly as I could, and then try to preserve my savings. How important is it to build a credit score as a college student? Well, so the challenge is that when you finish college and you go get your own apartment, or you want to buy a car or something like that, you are going to need a level of credit. And I am so how did I start my credit life? I will tell you that. It was in 1976. That's kind of embarrassing at this point. I got a Amoco card, well, it was Standard Oil at the time, a BP card, and it had a $400 credit limit. How much trouble are you going to get into, right? So that was how I got started. And I had a small credit limit, and I paid my bill every month. And then I got an American Express card, which requires you to pay your bill every month. And I used that very carefully, and maybe I only had $100 a month on it, which was a lot of money back then. And by doing those very small things, I built up a fair enough credit score that when I had to buy a car, my first car, I could do that. So I think you take baby steps, but what you want to make sure of is, if you get one, say you get a gas card, make sure they don't give you a big credit limit. I have a Amoco card still. I've had one for almost 50 years. The thing's got a $5,000 limit on it, and I do not understand why. I mean, I'm buying gas and paying for it every month. Don't let them give you a giant limit. Then you can get started responsibly and slowly. That would be my advice. Wow. Tell you what, I'm going to hold, there's good questions here. I'm going to hold them, a couple of them, for a bit while I finish this page, and then we'll do a poll, and then I'll come back to these questions. So we got through impulse spending. I'm going to ask you to always try to wait for sales if you can. So I have an addiction to Diet Dr. Pepper, and it makes me mad to pay retail. So I wait until they got it on sale, and then I wipe out the grocery store, right? And that's just a small example of it, but it's exactly the thing I'm thinking about. I got to buy tires for my car. I'm waiting for my local tire dealer to have a sale so I can go get them for a reasonable price. It's just simple stuff that you can do, but you have to take a step to actually do that. By the way, I would have liked to have had those tires this morning in the snow. Okay. Another thing you can do is ask for a lower price. Just because something's got a price tag on it doesn't mean you got to pay that price. I'm kind of famous for this, and it embarrasses my wife, actually. But I'll go to the men's store and look at some shirts and say, okay, I'd like 3 of these shirts, but not at that price. What we could do is maybe you could sell me 3 of these shirts at that price, but you throw in 2 ties. And the guy sometimes will tell me to leave his store, and that's okay. And sometimes they'll say, well, I can't throw in the ties, but I can lower the price of the shirts 10%. Okay. And so there's always a deal to be made. And it's a little awkward maybe sometimes to ask for it, but why not? What are they going to do? They want to sell something, you want to buy something, you can make a deal. So that's something that you should think about. Now, I'll tell you a bigger case. I had to have I told you about my dental work. I ended up paying cash for that, and the dentist gave me a 20% discount on it, $1,600 discount, right? So you just ask. Sometimes I'll tell you no, and you just decide to buy it anyway. I got that, but can't hurt to ask, right? And then here's one thing I want you to be sure you do: leave room in your budget for fun, because life's short. Have a good time too, but not too much fun. Okay. And make sure that you have enough income to support all of this. So for some people have made postings here, or questions, actually have taken that step. They've got outside jobs. They're doing some independent contracting, things like that. They're trying to grow that income a little bit so that they can meet their expenses, or maybe have some of these special items that they'd like. And then finally, my motto is, it's not about deprivation, but moderation. Okay. So just be moderate, and you're going to do fine. Now, Chris, can I have the next poll here? It says, which of the following is not a tip to aid living on a budget? So what we've got here is pretty much what I had hoped to see. Don't deprive yourself to a reasonable pleasure in order to meet the budget, right? You should plan your large purchases to avoid impulse spending. You should ask for lower prices. You should wait for sales. Okay. So, it's just been pointed out to me what time it is. It had gotten away from me a little bit. So what I'm going to do is, I may not be able to get to these questions right away, and I'll tell you how we can get you some answers on them. But let's move ahead. And I want to give you, there's only about 3 more topics here that are fairly simple. And then if we got some time, then I'll answer a couple more questions. So we now know the mechanics and tips for achieving a budget. What's next? Well, it's not enough to have a budget. You got to use it. Do your comparisons every month. Make sure you understand why there were variances, and don't let the negative variances get you down. Okay. Simply adjust the behaviors to assure you execute. Well, you know what a lot of people do when they get the negative variance? They crumple the thing up and throw it in a trash can, and that's it. That is a plan to fail. Okay. You can't let it eat at you if it's not working out. What you've got to do is figure out what can you do to solve the problem. And you might need to get some help to figure that out, but it's all problems are solvable somehow. And what I would encourage you to do is to make sure that you keep that in mind. There are three reasons that people don't meet their budget plans. The first one is not differentiating between needs and wants, and what my mom and dad used to call living beyond your means. Okay. We all need clothes, but you don't have to have designer clothes, right? So you can look pretty good with clothes that maybe don't have a label on them. That would save some significant money. My car example is another one, right? I don't have to have a Bentley. I just have to have something that's reliable. Here's the thing. Don't let your perception of social expectations cloud your judgment. I had that happen once. I was working for a CPA firm early in my career, and they told me that my 10-year-old Dodge Dart was pretty disgraceful and I needed to have a new car. And I've actually did it, and I hated myself for it because it wasn't the right time for me to buy a car. And so you got to be careful not to get ahead of your skis on meeting your needs. You know, you can't always have all of your needs plus all of your wants. So carefully live inside your means, not beyond them. My parents used to say, live beneath your means. Okay. Second big reason is something called lifestyle creep. So what happens is you get a pay raise at work. Let's say you get a big fat pay raise, 10%, and you increase your spending a little too because you got a pay raise, but unfortunately you increased your spending 15% and your payroll only went up 10%. And that can mess up your budget too, because what it'll do is ruin your ability to save. Okay. And it's very common, very common. Now, Warren Buffett, the big billionaire, has avoided lifestyle creep. He lives in the same house he bought in like 1956. He still drives a Lincoln Town Car. He's a very unassuming guy. I think he buys off the rack clothes and so on. That's a better plan, right? Don't let lifestyle creep happen, because then you'll have less to save. Okay. And then the third big reason that people don't meet the plan is they care too much about what other people think. This is your plan. You're the only person that has to be satisfied, and live your life on your terms. Okay. That's the thing I would tell you. So we're going to wrap this up before I see if I got a couple minutes to answer a couple more of these questions. Budgets are critical. They're for everybody. And your real financial success is going to require planning and being careful about how you use your funds, and most of all, savings. If you want to build a life of wealth, you're going to need to save regularly, and the budget provides the means to do that. Balance your needs and wants, and remember to budget to deprive yourself. If the bold print's exactly right, if you prepare and commit to a budget, you'll be well on your way to financial freedom. Okay. Let me see. Do we have yes. So we have my contact information here. And if you want if you have questions that I didn't get to answer or something like that next week, you can give me a call or an email, and I will be happy to either chat with you or correspond over email so that I can do a good job of answering the questions that we don't get to. And, if you have any continuing concerns or questions about this, or you'd like to run something by me, I'm also very, very willing to talk with you. Um, let me see here. The first one, I'm going to ask her maybe one or two more of these. Uh, the first one says, I owe credit card debt, but I also need to start saving money as well. If my debt is larger than my income, should I focus on paying off my debt? And I think so. I think so. Because by paying off your debt, what you're doing, you're not saving cash, but you're increasing your balance sheet. What you're doing is reducing the debt so that you won't have to pay it later. I think that's the right approach to pay off that debt if it's larger than your income. Okay. Second one was, do you have any opinions on what credit card's best for students in college? Um, my short answer to that is none. But the if you feel like you got to have one to start to build some credit or something along those lines, I would follow the approach that I used, which would be a low limit uh, oil card and maybe an American Express card. Thanks for being with us today.